Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, we're going to take a look at a setup in Goldman. Financials are looking a little weak here, and it looks like Goldman can punch through here. So to set up the trade, we're looking at Goldman in the red and green candles overlaid in the S&P, overlaid with the S&P in that teal color. You can see the S&P has been pushing higher as Goldman has kind of been hanging out, going sideways. Then we got the gap lower. Now we have consolidation. And it looks like, for two reasons we'll discuss next, that it looks like Goldman's ready to punch through. Number one, as we take you off this screen, let's take a look at TLT. This is the bond ETF. And I'm going to go ahead and remove the SPY. Bonds are acting very stubbornly strong in here. And keep in mind, as this TLT, which tracks 20-plus year U.S. Treasuries, moves up, bond yields will drop perfectly and inversely, which will take away that net interest margin earning capabilities of the financials. So Goldman looks like it's set to move lower. The other reason I'm getting a little bearish in the overall market here, just tech. Looks like tech is starting to run out of a little bit of steam here. We're kind of hesitating here in the Qs up around the $140 mark. We're seeing some kind of loss in leadership by Amazon, by Google, and some other major tech stocks are not acting that well in here. So for all those reasons, let's attack the financials on the short side. So here we are on Goldman on the daily, and it looks like we have this vulnerable support shelf right around the $215 mark. It looks like we've tried once, we bounced, we're trying a second time. Usually when they come back for a second time, they want to push through and capture any stop losses below that market, below that low. So I want to use that to our advantage. So I'm just going to set up a little short-term trade here. Just go ahead and buy the $215 put, sell the 210, just kind of take advantage of that little push through this support shelf. And then if it continues to go, we can certainly roll the trade out and extend the duration of that trade. So here's Goldman. We're going to do this in the, let's go in the, we'll give this, I just put this trade out. We're going to go out in the 6-9, so the 9 June options, 18 days to go. We're going to buy the 215 put, sell the 210. Altogether, we paid about $1.90. Now it's trading $1.95. Perfectly fine, so that's our max loss down here to $1.95. Again, we're looking at that purple figure right here to give us our P&L at all prices along the curve here. So max loss would be down here once we hit $215. That is our long strike. That'd be a $195 loss, and then over on there on the left scale, we'll hit break even just at about 213 bucks, and then our profits will max out at that short strike of 210 at a $305 gain. All right, so let's go ahead. I'm going to put the mid price in, $1.98, send this trade in, and that's working. Traders, we use approximately a 50% give back rule for our debit spreads. So if this option trade becomes worth about 99 cents, that's going to be half back. We'll go ahead and close the trade. Obviously, Goldman's not set to break down to those lows, so we'll simply contain risk and go on to the next trade. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade. Hope that helps. Be sure to use your stop loss. Be sure to follow us also on Twitter at Trading Nation for updates on this position, as well as all the other trades and markets our traders are watching, and we'll see you guys on the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.